Let's go with Apple. Everybody likes Apple, right? So boom, so we have Apple. So now if you hit the little plus, it's gonna give you information about Apple. Let's get it, right? So this just gives us information about this particular options, which is the 130 strike expiring 5/21. So that's expiring at the end of the week. And then, we have information here, which we'll get into later. But it opened at 126. This is Apple. The high was 126.96. The volume, all that jazz. So this is good stuff. Um, Daily chart, and then we got some headlines that have to do with or related with Apple. And if you go to this to the side, you'll get some detailed quotes about Apple the last 5 days. So you can kind of see like where what the price is trending like. And then this is really cool right here. You see the Barchart opinions. So this kind of tells you whether it's a buy or a hold or sell. Right. So this tells you what was trending right now for this company, right? Apple in this case. It looks like the last month people buying it, right? And then we got technical analysis, key statistics, balance sheet. Like you got everything you need is here, right? Everything you need is here. I just want to make that clear, right? So boom, boom, boom. We're gonna go back to the beginning, right? I'm gonna minimize that. So just off of that little boop, a lot of information, right? You may not know all that information, but it is available to you. That's what's important. Now, if you go here to the three little dots, click on it. This is the bread and butter right here. This is where I don't go to the other information. That's more fundamental analysis, which I love. But as far as the options, this is where I go, right? I'm going to show you guys two things that I always do before I decide to open an options contract. The first thing I do is I look at the options chart, right? One of the reasons I look at the options chart is I like to know where I stand before I get into the contract, right? That's very important for you to know, like, okay, where am I actually getting in, right? And oh, look at this. So this is cool. Like I have some options already. I mean, I have a template already saved, and this is a Bollinger Bands, but this is what it looks like if you go to it for the first time. How does it look like? It looks so weird. Yeah, this is what it looks like, and it doesn't have any study. So this is my own template, but we're gonna clear it so you guys can see what it looks like. And then you can customize it. So this is what it looks like. This is telling me the last 6 months, but I don't really want to know about the last 6 months because there's a lot of not useful data here, right? There's no data there. So let's go to the last 3 months. Excellent. So this just tells me that this contract in particular was written about 3 months ago. So it's fairly new. Um, and just to be clear on something, sometimes contracts are opened and then they're bought back by the person that opened them. So that means that the contract is closed. So just keep that in mind. So this is what it looks like. And what I'm telling you is that before you buy, if you want to buy this contract, you want to have an idea of where you're buying the contract at. And what I mean is, are you buying it at support? Are you buying it at resistance? Are you buying it at a breakout? You want to know because you don't want things to be a surprise, right? And I'm going to tell you exactly why. So the contract open here, right? It's fairly new. I don't know what was happening with Apple around that time, but that's something that you might want to look at. What was happening during this time on Apple, right? Was there a big event? Was it earnings? What was happening? Because a lot of the times People that write these contracts are smart. So they might take advantage of, oh, Apple reported great earnings and Apple skyrockets and the IV skyrockets and the price of the option skyrockets. So you might have somebody that owns Apple stock, like they own the actual stocks. They might write this contract. Like, okay, Apple just had a extremely aggressive move. I think it's going to move down or it's going to stabilize. So it's going to move down in the next 3 months. So I'm going to write this contract now. So they write the contract knowing that it's going to go down, and then they keep your premium. That's pretty much how the game works, right? And what they could do is they could write the contract here, you know, for 9. They'll sell it to somebody for 9, and then they'll buy it back down here for 2, and that means that they just got 7 points, right? That simple. Write it, buy it back, problem solved, right? So you want to know when you're getting into the contract. Now for this contract in particular, and again, this is the Apple, this is a weekly contract. And it's for the $130 strike, right? So if you were to buy this contract here when it first came out, you would have paid 9, right? But the contract is new. You don't know like what's gonna happen with Apple. You have no idea. You don't have anything to base your decision on. I don't think that's an ideal time to get in when a contract is just written, because of what I just told you earlier, right? Somebody's writing these contracts with the intention of taking your money, taking your premium, right? So don't rush, right? Don't rush. A lot of the times, you know, FOMO kicks in. You're like, oh my God, I missed out. Let me get a contract. And I'm just like, no, it's too late, right? Somebody else is going to get that money. So this wouldn't be an ideal time to get in. Is a high. This, okay, that's not a that looks like a low and it bounced up. So that would have been like a good entry right here, right? If you would have gotten in here around 3, you could have sold you know, around 6. That would have been 100% profit. Easy, right? Um Here around 2. If you would have bought around here, and let's just go down so you guys can see the dates, right? So if you would have bought around here, this was about 2 months ago at 2. And you would, if you would have waited, what is this? This is about a month. So you bought it at 2, and then I think a month later you could have sold it at 8. Yep, 2, 8. So yeah, about a month later. So that would have been 2 to 8. That's 102. That's, let me use the calculator, right? Let's do this legit. So yeah, so that's a 3x, right? So that means you're up, you know, close to 350%. So that's perfect. Um, if you would have gotten up here, this is tricky, right? Because you do have information to reference, so you know that we just hit a huge increase, right? So nothing goes up forever, right? So if you get up here, you have to understand that the stock is either going to go down or it's going to consolidate. It's not going to keep going up because nothing keeps going up forever, right? You can't drive a car forever. Like you need to stop and get gas. So stocks do that. They go up, but then they got to chill out, get some gas, right? Build momentum back up before it continues to go down. So if you got in around here, that's what you're thinking. Like, okay, like it just had a huge increase the last month. You know, whoever bought at the low at 2, they're like up 300%. So they're probably like, I'm about to sell and cake. So you're gonna have a lot of people that want to sell. So if you get in, just know that like a lot of people might want to sell right now. So this might drop, right? So this wouldn't be an ideal time for me to get in. I will probably wait until the consolidation happens, or if it's gonna drop, I'll wait for that to happen. For example, whoever got here at 8, and this is about 2 weeks ago, whoever got in 2 weeks ago at 8, right now is sick to their stomach, right? Because literally, if we look at the dates, 4:30. So that's 2 weeks ago. No, wait. Yeah, 2 weeks ago. So you're talking about it dropped more than 8 points in 2 weeks. So whoever got in there is they lost everything. I'm sorry. Rest in peace. They lost everything, right? But now over here, you see how we're like building a base, right? You see how like over here, like it's not going down anymore. It went down a little bit, but it built that base on a few days. This is the daily chart, by the way, guys, right? So this might be a good time to get in because, okay, it's building a base. It's looking like it's not going to drop any longer because people are supporting it at this price. That means people are buying it at this price. So this might be an ideal time to get in. As far as the history, that's only one piece of the game. I wouldn't tell you to get in now, get in, because there's more to it. But just analyzing the price history, this is, I want to say, right now up to this date, this is the best entry for this particular contract, right? Obviously, there's more to it, um, and that's pretty much it for this part. Again, you can create your own template. This is how I would look at this. I really like candlesticks, so I would go to candlesticks. And then, I will add some type of study. I like the Bollinger Bands, right? And this helps me visualize things a little bit more clear. So this is how I would look at this. Let's actually make this, I was gonna make this bigger, but I'm not. I'm just gonna scroll up and down. You guys gotta bear with me. And there are tons of tools here for free that you may not understand, but the fact that they're there, that's what's amazing. So this is how I like to interpret this. The red means at the end of the day red. The hollow or the white means at the end of the day green. And then the black, I have no idea. To be honest, I have no idea what the black represents. And then the Bollinger Bands is one of my favorite studies. It is just a collection of price movements, top, bottom, and then the middle one is the average. And that has a lot to do with what I was saying about earlier, that stocks usually have a resistance and they have a support. So these two lines act, the top lines, they act as resistance, support. And then the middle line is the average, which is determines like where the price is going to recalibrate to or like revert back to. Everything goes back to the average, right? You have outliers, but everything goes back to the average. So if we were to get in, this would have been a great time to get in, right? And then this would have been a good time to take profits. Here, this is the tricky part, right? So you see here, you could have at right here, you could have been like, oh, it's bouncing up, and then it kept going down. That's gonna happen, man. But something must have happened that day to make it bounce down. It could have been earnings, it could have been the overall market, it could have been a lot of things. But we expected a bounce here, it didn't, and then it kept going lower. So what this tells me is a lot of people got trapped. Everybody that expected a bounce got trapped, right? So just keep that in mind. We have a lot of people trapped. It bounced, and right here, like we discussed earlier, we're forming some type of base. So it's good. Now the base doesn't mean it's gonna go up. It could go down, right? But just looking at what we have, this is the lowest it's been in the last 3 months. It's already like at the at the lower extreme level, we could assume that Apple in the near future is going to have a bounce up to the average. So I will get in here. Um, and that's pretty much it for this. We're not going to get into volume or any of that stuff for this video. We're not going to get into any tools or any settings or anything like that, or any functions like how we got here. But that's pretty much, this is just a good starting point. What contract am I buying? When am I getting in? So you're not surprised, like, oh my God, I lost half my life savings because I didn't know what I was doing. With this, you can have a little idea of what you're doing. So definitely use this. So that's one of the little tricks I wanted to show you guys. Let's hit the back button. So we have one more thing and then you guys are good to go. By the way, I'm a high school math teacher, so I'm gonna treat you guys like my students, okay? You guys are gonna learn. All my students pass for the most part. You guys are gonna learn. All right, guys, so let's go back to that same contract. Was it this one? Yeah. Let's go back to those three little dots all the way on the left. So now, you can add this to a portfolio or a watch list, which is really cool if you have a membership for free as well. But that's really, really good. I love all the stuff that's available with this. The next thing we're gonna focus on is the price history. So the price history, like you could say that is a different way of viewing the information that we just saw on the chart. I'm a visual person, so I prefer the chart. But if you're not a visual person and you're just strictly numbers, numerical, this is also good. So this gives you history, literally, of every day since that contract was written, what happened. So you can see historical information here and make interpretations of what's going to happen, right? You can't make a prediction without using information, right? That's not a prediction. That's just like a guess, right? I guess, right? When you make a prediction, you need information. So this helps you make a prediction. If we're just looking at the price movement, something that I noticed that speaks to me is when it first came out, the implied volatility was really low at 35, and it stayed, it actually went lower. So that means that there wasn't really a lot of anticipation for Apple. So that could be good or bad, depending on who you ask. If you're a buyer, it's good because you're getting the option at a discount per se, because the IV impacts the pricing of the option. But if you're a seller, this is not good because if the IV goes up, the price of the contract is going to go up. And as a writer, you don't want that. As a writer, you want the price to stay below what you wrote. So that's just something that I looked at. The IV was low all throughout. We're talking about 3 months. So there wasn't, which is weird because I think Apple reported earnings within these 3 months. So there should have been some type of spike in the IV, but maybe not necessarily for this particular price, right? So that's one thing that stood out to me. You could also arrange this, which I don't suggest because then you lose track of the actual history, by these things, by like open interest, 1721. Wow, it's a lot of open interest. Oh, this is kind of good. So this was, oh, this is today. So, oh, this is kind of good. I'm sorry, guys. I completely forgot we were doing a video. I just found this very interesting. So from the 14th to the 17th, so that's like over the weekend. the amount of open interest went up about 20,000, and the volume stood the same. So that means that more people bought the contract. So maybe I kind of feel like that's unusual. Maybe something's happening with Apple. But just looking at that, I'm like, maybe something's happening with Apple. Let me look further into this. This is why you have a website like this, right? Because it's gonna give you a little edge versus somebody that doesn't know like what they're doing, or somebody that's just following um somebody's suggestion, right? They're just like, oh, buy this, and they're buying it. You could do that. I don't know if that's sustainable, right? Or when that person that's telling you what to buy is no longer interested in telling you what to buy, like what are you gonna do then? So it's very important that you learn something. So that's where I come in as a teacher, as an educator. I want to make sure you guys learn something. So again, I don't suggest you guys like mess around with this unless you know, because the point of this, in my opinion, is to see the historical trend, right? And we can see that historically, the open interest started at about 1,000, and now it's at 83. So it went up in a few months. About 82,000 contracts were open in the last few months. So there is a lot of interest in this. Um, so that's something to keep mind of, the open interest. The volume, you could try to identify if there are any spikes in volume. Just by looking at the numbers, I don't see anything that's very spiky. Well, here we have a huge spike in volume, right? So that would have been like something I would look at, but nothing else. And then the other thing that I like to focus on is the actual like price, like open. Oh my God, what did I do? Like open, high, low, and last. So open is in the morning, like what it opened as, and last is what it ended the day at. So today it opened at 0.52. The high was 0.52, and the low was 16. Wow, it really took a beating today. And then it kind of like stabilized. It pivot. I'm sorry, guys, if I'm not doing a good job explaining this. It's just that I'm visualizing how this looks in a chart. um, and then the change, it was down 44 or 66%. So that's one thing about options you guys got to be ready for. Like you could have crazy profits in a day, in minutes. Like it's insane. So for example, this contract was down 67% today. So whoever bought it in the starting of the day lost 67%. So that's crazy. So you can't invest your entire portfolio on this because that would just be like gambling. But that's just good information to know. Um, and then that's pretty much it. We can see that the price, obviously, we saw this in the chart. It really went down a lot, a lot, a lot, a lot. And we could see spikes like even from here, it went from 768, it spiked up, but then boom, like in a day, it dropped 50%. It's crazy. Anyways, let's refocus, guys. So that's that. If you want to look it up for a particular date, you can as well. And then you could download this information. So that's let's go back. That's the second thing I wanted to show you guys. And then let's go back to that same contract. Which one was it? Wait, it's never went back. What's going on here? Cash rules everything around me. Scream. Get the money. Dollar bill, yeah. Yo, pero ¿qué es lo que está pasando aquí, Dios mío? Sorry, guys. You know, my Spanish comes out when I get mad. Computer's been really slow, so bear with me. But you could just vibe out to this JC and Drake song. Old school. Yeah. Whoa. Go back to that contract and end strong. So again, Apple, let's go back down to a little three dots. The last thing I want to show you guys is we're not gonna do overview or interactive. We're gonna go to just the quotes. And that'll be it for today. Didn't I just click on the quotes? Yo, my guy. My guy. What's good with you? All right, again, so these are the quotes for Apple. So this is if you want to look at, you know, what else is happening that week, right? If you want to look at the other strikes, and this is the one we were looking at, the 130. So the last thing I'm going to do is I'm going to show you guys like what I would do if I was thinking about buying this. So I will come here to this week, right? Which is the week. But if you want to buy something further out, I always suggest you buy the furthest out. That is the most expensive. If you want to think like an investor, but if you want to think like a gambler, you buy the weekly. You know, it's whatever floats your boat. So we're gonna go with the weekly. Boom. So you could look at this information how it is presented here, because it's presented in sequence. So the price is going up. So you can get an idea. So that's always smart. I always like to look at the volume so I can see which contract is being most active. And we see is the 130, which is the one that we were looking at, right? So this is the most popular right now. And then the 126 and then the 127. So literally from 129 to 130, 125 to 130, all those are very popular. Anything above 130 is not as popular, right? We also look at the open interest, which will be the same. The 130 has the highest open interest. And then you want to look at your IV. And then if you click this, you could get to like the stuff we were looking at earlier, pretty much. So it looks like this 130. It's looking like a good buy, to be honest. But you will need a lot more information to determine if it's a big buy. So you want to make sure that the bid and ask is not too far apart. That's going to make it difficult for you to sell the contract. So you want to make sure you buy a tight spread. So we can see that this one, the bid and the ask is just 1 cent. So if you buy at 20, well, the ask is 22 cents. So if you buy it at 22 cents, you want to get out right away, you could sell it for 21 cents, right? So that means you only lost 1 cent in your investment.